So if you take that experience and you fast forward to June of 2026 when we're recording this episode, what do you see happening right now? Because right now we're currently trying to figure out what's going to happen with Iran.
I would like to take a 10-minute break and then 3, 2, 1. How do you have the ability to analyze stocks?
Welcome to the Generations of Wealth podcast. I'm your host, Derek Dombeck. Today's conversation, one that we have never had before on this show. Our guest is got a wealth of knowledge in trading and running a brokerage, securities, stocks, things like that. Worked with a hedge fund. You'll hear it all in the show. But really kind of diving into how AI is affecting that type of market. Before I bring Eric on, just try to do this every show, right? Just let you know that I'm here as a resource for you. The Generations of Wealth team is here as a resource for you. So go over to derekdombeck.com and get connected with us. Let us know what we can do to help you. And with that said, let's bring on our guest. And here he is, all the way from New Jersey, Mr. Eric Choo. Eric, thank you so much for being on the Generations of Wealth show.
Oh, thank you, Derek, for inviting me over. Glad to be here.
Absolutely. Would you be so kind as to tell the audience a little bit about yourself, and we'll dive into a topic that I know we have not talked about, I don't believe ever on this show.
Sure, absolutely. I kind of have a fairly unique background. I was formerly an engineer. This almost like in my prior life, way back. And then I think since 2006 that I did my business school at NYU Stern and then switched into Wall Street. And since then, kind of never looked back for about 20 years. Capital markets, in the most recent years, have been the CEO of a fintech firm slash broker-dealer, Trader Securities. My experience spans across capital markets, both on the sell side, research, investment bank, covering telecommunication services for a number of years. I also was a senior executive at a data center operator for a number of years, as well as a joint venture with a premier private equity firm for a number of years. And now for the last 3 years, have been focusing on building Trader Securities, which is a broker-dealer slash fintech firm, primarily serving the investment community.
Okay. So you've done a couple of things.
A few.
No, that's amazing. And we were chatting a little bit before we started recording, right? Like I really like bringing different types of people on this show to get different perspectives in a lot of different genres. So how did you, I guess, transition in each of those different roles, and what did you learn from each of those different roles to get you to where you are today?
Absolutely. So capital markets, this is even what goes way back when I was an engineer. I was always been interested in capital markets, stocks. Back then I was using Yahoo Finance for a lot of research since these sort of sophisticated AI tools was not around, anywhere near around. But the market really attracted me to the point where, basically 20 years ago, I decided to essentially switch career and then went into finance by obtaining my MBA with the focus in investments in finance at one of the top sort of business schools in the US, and then over after that, really, I think go straight into B school and at a very, very interesting timing. If you recall, 2006 was the year when I entered business school, and 2008 was the year when I exited business school. And it so happened that was the year of financial crisis, right? The subprime mortgage debacle, along with this financial crisis of everything, happened. I was actually originally supposed to join Bear Stearns. That was my offer. I received the offer, still have all the kind of souvenirs from way back when, that Bear Stearns logo. But that was my kind of the job offer that I received as part of the MBA program. But by the time I was ready to, I know, start working full time, the company was getting ready to get acquired by another, financial services firm. We all know the name. But that was kind of an interesting start. But then, I worked in the hedge fund, a fairly sizable hedge fund, about $2 billion in AUM for a couple of years after B school. Obviously had a front row seat in terms of looking at, what happened, right? When sort of the financial market all of a sudden became kind of overwhelmed, right, by a lot of the things that people used to think that are small, right? And then one thing led to another, which led to the sort of a collapse, almost collapse, right, of the financial market. And then we were kind of on the front row seat because we were an equity investor at a market neutral hedge fund. We were involved in, invested in a bunch of different positions, and then a lot of things, happened afterwards. And
Yeah, a lot of my listeners that have been following me for a long time, they know where I was in 2007, and I was getting my ass handed to me in the real estate crash. And so I can imagine as you were in school, starting in 2006 and ending in 2008, there had to be a little bit of doubt in your mind as to what it was going to look like when you did get done with school. But as you got into the hedge funds and things like that, like you said, they're invested in different types of markets. What did it look like back then? And I guess keep us going on the timeline. How did that transition you moving forward?
Yeah, sure. So the hedge fund was very, very interesting experience. Especially in the backdrop of sort of this is 2007, 2008, 2009, with the sort of financial system that's kind of changing almost on a daily basis, right? One thing that I would highlight is at the hedge fund, when we were investing across the board, we were very, very negative across the board because everywhere you looked, fundamentally, you look at macro factors, you look at the specific companies, micro factors, right? Everywhere you look around the corner, turning all the stones, right? Everything looked so pessimistic. This is back in 2009. So we were at a hedge fund, we were essentially short, overall short on the short side. But clearly the market did not agree with our investment thesis. And then I remember correctly, from March 29, 2009 and to 2010, the market ripped, right? And we were caught essentially sort of barefooted, and the direction is completely wrong. And then which led to quite a few kind of a subsequent, customer withdrawal and all that. So I guess the lesson learned really is that you gotta be consistent, right? In terms of your sort of decision making and your investment research. On top of that, you have to take into consideration what your investment thesis is versus what the market is thinking, right? Because sometimes you think you are outsmarting the market, but if you cannot outlasting the market, then you have an issue, you have a problem. So that's kind of one big sort of learning from that experience.
So if you take that experience and you fast forward to June of 2026, when we're recording this episode, what do you see happening right now? Because right now we're currently trying to figure out what's going to happen with Iran. Well, enough people have been inquiring, and I'm going to make this super simple on all of you that are listening to the show. If you have any desire to work with me, whether that is a transaction that you're working on that you need help structuring, if you'd like to buy a deal that I have for sale, if you would like to sell me something, whether it's real estate or a business, happy to talk with you. Or if you want to be a financial partner in one of our real estate transactions, simply go to derekdombeck.com. On the homepage, there will be a tab and there will be a web form for you to fill out. Check the boxes that make the most sense for what you want to do. and you will get directed to schedule a call with me, and let's have a conversation. Let's see what we can do to work together. So look forward to hearing from you, no matter what it is that I can help you with. Again, go to derekdombeck.com, fill out the web form, schedule a call, and I will talk to you soon. And the markets are up and down depending on where you are. I mean, of course, the stock market is one thing, but real estate markets, commodity markets, all of these things are somewhat in a little bit of, I don't want to use the word turmoil, but there's doubt, right? There's a lot of consumer doubt, in my opinion.
Yeah, so look, I'm not an economist, so I don't think that's my expertise to offer too much in terms of the macro factors. But what I can say is, the data center industry, that's an industry that I have spent more than a decade, almost 15 years of my professional life covering. So I kind of know that industry very well, which ties into your question in terms of real estate, in terms of technology, in terms of AI. Data center industry used to be a very much, this is, I'm talking 20 years ago, used to be a very much its own path, right? Its own highway in terms of basically these data centers are technology companies like Equinix, CoreSite back then, right? These are very much technology companies. And then separately, you have real estate companies, right? Essentially, there's no interconnection between these two. These are two essentially parallel paths in terms of industries, right? But then, I think this is back in 2010-ish, these two industries, verticals, start to converge, right? The data center companies are becoming heavier and heavier in terms of their infrastructure, in terms of their assets. They acquire the real estate that they used to lease, right? They acquire the equipment, right, that they used to outsource or lease from other people. And then in the same time, a lot of real estate companies, right, they saw the demand into those data centers, right? That's essentially supporting waves and waves and waves of technology innovation, all the way back from internet to cloud computing, to mobile internet, and now to AI, right? Every single wave you look, right? One of the fundamental drivers is supported by data centers because everything, right, in terms of data, if you look across the board, data processing, storage, interconnection, and transmission all occur in data centers, right? Now, the real estate guys, they saw that trend, and then they wanted to get involved into the data center industry, and then more and more they are investing into those companies. So now, today, fast forward in 2026, we see a lot of companies or institutional investors that used to be only investing in real estate, maybe multifamily offices, maybe industrial parks, but now they wanted to get their foot into data center investments. And that's at the same time, the data center guys, by just driven by their customer demand, they are becoming more and more of landlords themselves, acquiring the real estate, acquiring the asset below them. So now, especially with the AI, right? A lot of power, a lot of network needs. So, the data center side, it's kind of a very interesting vertical that has a lot of things converged into them. I think that's kind of one way to tie into your question. The way I see it, I see a huge change with this latest round of AI innovation. I think we're in the very first innings, the first inning, the second inning, early stage of this round of technological change and wave that would, as a result of that. So I think there's a lot of positives. But now, with that said, the factors that you mentioned, obviously, there are potential risks, right? The valuation being high is one of them. The interest rates being relatively on the high side is another, which would cause a lot of ripple effects, right, on the real estate market, on anything, right? We look at the 10-year notes, that's 4.5%. The 30-year mortgages, 7% plus. right? And then these essentially cost of credit, they ripple through the entire economy, right? That's definitely a potential risk, along with the war, the oil prices, right? All those you gotta factor into. It's a very dynamic kind of a market, right? On the one hand, you have the AI boom. On the other hand, you have all these risks that you just really, as an investor, have to sort of balance off a lot of different factors.
Well, and that was one of the things I learned the hard way years ago is I was just focused on real estate only, and I didn't really pay attention to other factors, other markets, commodities, how that all affected the global business that I was in. And I mean, we're talking 2 decades ago compared to now. Um, just literally before we started, chatting, I was on the phone with a friend of mine, and we were comparing his market to my market and what we're seeing different and what's affecting it and what we can do to pivot. A lot of that is having a network, having resources. The Generations of Wealth podcast is all about connecting people and giving people resources to different aspects of all different investing. But that being said, if you don't pivot or if you don't move with technology, you fall behind. And now you fall behind even faster than you did years ago. I joke with some of my friends, I bought my first two real estate investments out of a newspaper, and now and now we have AI agents doing a good chunk of the work. It it's really kind of mind blowing, quite honestly.
Yeah, absolutely. I'm 100% on the same page as you in terms of the potential change, right? That's being caused by the AI. And I'll give you sort of my example from my experience. When I was the sales side analyst at investment bank covering telecommunication services, these stocks, companies like AT&T, Verizon, right?
Mhm.
Equinix, the data centers. Well, it used to take us days and sometimes weeks if we want to do a deep dive of a industry report, a company specific report, right? But now, fast forward today with the help of AI, it takes, we're talking hours, sometimes minutes, in order to generate the same level of detail, of accuracy. I think so that's AI is very important as a critical efficiency tool that can help, all industries, all sorts of industries, help them make better decisions, get smarter, do things faster. However, back to your point that you mentioned earlier, which I think is very important, in the days of AI, I think it's increasingly important for sort of the traditional networking relationships because everyone has the AI tools now, right? So your interpersonal collaboration, your relationships, the in-person conversations are becoming more and more important just because you can no longer get an edge by access to information because everyone has, the same sophisticated AI tool that can digest, right? Cut through all the information very, very quickly. So your competitive edge becomes your sort of interpersonal skills, your collaboration, your network, the more kind of a things that people used to care about 20, 30 years ago. But I would argue that today it's even more important than it used to be.
Yeah, and the information is overwhelming, and without that interpersonal connection, having somebody to bounce ideas off of, because when I first started, I mean, the internet wasn't even a thing, or it
Right.
was just getting started, right? So you would go to in-person networking events or seminars or things of that nature. Now everything's called a mastermind, which most of them are seminars. But I still want to be able to say, okay, this is what AI told me, but I want to bounce that off of you, Eric, and what are you hearing and seeing versus what AI is telling me? Because personally, I don't trust everything that's on AI and shouldn't. Um, but what does that look like today? What does that look like in the future, in your opinion? I know that's kind of a broad question,
Mhm.
but how do we predict what 2027 looks like? when things are changing so rapidly?
Yeah, I mean, it's something that I think we would have to, on one hand, we have to embrace, right? Because otherwise, we're going to be left behind without the help with AI, without the improvements in the efficiency and smartness and how fast things can get done. But in the meantime, I would 100% agree with you. So we got to watch out for the AI hallucinations, right? They do not spit out accurate information all the time.
Mhm.
And sometimes, the answers they provide, they look maybe on the first glance, they may look pretty good, right? Pretty impressive. But once you dive into the details, you're gonna start seeing, oh, well, that doesn't make sense. Okay, there's an issue here, right? So at this point, I think we're still early in terms of the development of AI. I know we have come a long way in terms of training usability, but I think relatively speaking, we're still early in the age of AI. We got to really watch out what the AI, puts out in terms of answers. But I think my view is that, especially working through the data center industry, we used to work with a lot of different companies from different verticals in the cloud computing, in high tech, in pharmaceutical, right? All these were sort of our customers that were procuring data center services, and then we got to learn them, know them, their business along the way. So I would say today, or fast going forward in the next 3 to 5 years, I think you are going to see a proliferation in terms of AI applications from different verticals, right?
Mhm.
In the last 3 years, right, since AI came about, it's all about training. Who can come up with the smartest, the best AI training tools that can provide sort of mass market for all customers, right?
Mhm.
But going forward, I think AI is going to go into enterprise, different verticals. We're talking financial services, pharmaceutical, maybe oil and gas, right? What have you. And then all these industries, especially, I mean, we operate in financial services, which is a highly regulated industry, and along with quite a few other industries. So all these industries, they have their requirements, their regulatory requirements, their compliance requirements, obviously their productivity requirements, right? You're gonna find that going forward, these AI companies, they're gonna try to work and dive deeper into each and every single of those industries and try to make innovative products specifically tailored, designed for those industries. And then accordingly, I think that's really the true wave of demand of AI from AI applications would come about, right? The inferences, absolutely that's kind of a key driver. That's behind all of these, but I think industry specialties, specialized applications, I think that's kind of gonna be the next wave of of this cycle.
Well, so as co-founder of Trader Securities, what does your day-to-day look like? What does Eric do every day?
So I kind of I wear multiple hats. I think the two most important hats is one is on the fintech side. So we are a fintech broker dealer. We provide a bunch of tools for customers, for our clients that can help them make smarter decisions, right? Digest information faster. AI tools that we have, for example, AI tools that we have put out last year. It's called Prism AI that can help customers research on the individual stocks. And also, since it's fully integrated to our platform and every single customer's portfolio, it can help customer analyze portfolio, digest portfolio risks, do portfolio reviews along the way, right? So that's one. And then we have put together a few, tools, for example, thematic investing, recurring investments, right? These we have been very selective in terms of putting out tools that can help our customers, because we believe in a balance between sophistication and versus the ease of use for customers. So I think we have selected our tools with those considerations in mind, just so that I think the majority of our customers are busy working professionals in whatever industry. It could be lawyers, doctors, pharmaceutical industry, marketing industry, right? These are busy professionals building
Mhm.
up a career in whatever profession they're in, maybe busy raising a family as well. And in the meantime, they all care about their own financial future, right? And they don't have a lot of time. So really, we want to put together a platform that can help these people be able to access the information, get to the decision they need to be in a very efficient and fast way without a lot of sort of a noise, along the way. So that's kind of one side of my day today, and then the other side, as I mentioned, because of my background in data center industry, we are also in the process of building up a specialist boutique investment bank, specifically, servicing data center industry. We are a operator turned advisor that help not only the capital institutional investors try to analyze, understand, and access to certain curated opportunities in the market, but also help other data center operators, especially the mid-tier ones, small ones, how to be institutional ready to get access to institutional capital, right? How to tap into the data center trend, essentially leverage what's happening in the market to essentially build a business for themselves. So that's kind of where we're also building that up as well along the way. So that's kind of a quick overview of what I do in my daily life.
Well, if I'm hearing you correctly, you're basically building tools or supplying tools to help people analyze. But you had mentioned earlier it's a heavily regulated uh, business by the SEC. And how does the SEC come into play when things are changing so rapidly with AI? Meaning, everybody just wants to go and ask AI, what should I invest in? And give me 100% zero risk. Well, we all know that's impossible, but in theory, if that ever became possible, that would crash the markets, would it not?
That's an interesting thinking. I think it's really the way I would like to think about this is um, we now almost everyone now have access to AI tools, right? That it's very smart, can cut through information very, very quickly. But especially in the investment world, financial services industry, we have to follow a lot of rules and regulations. You mentioned SEC, and then for our industry, there's also FINRA. That's essentially the industry regulator that puts up a lot of rules we have to follow. We are all, Trade Desk, along with we're all sort of member FINRA. I think we just have to be careful. I mentioned compliance is a big um, undertaking for us. A lot of things, all activities have to be compliant, have to follow all FINRA rules, cannot be misleading. We have to put up, disclosure, risk management, making sure there's suitability requirements for customers, for investors. But I guess with that all said, I would not worry too much about, the market being crashed because of all these smart tools. Just because, I think the way I look at this is think about the days before the calculator came about, right?
Mhm.
People were using rulers, right? Were using paper, right? Doing calculation on paper, right? Which is a lot slower. But
Yeah.
now, when people all had access to calculators, right? They can do calculations a lot faster. But think about your competition. Everyone else can do calculations a lot faster too, right? So it's not that all of a sudden you have gained an absolute edge that you can outsmart everyone else because they all have almost instantly have access to the same tools. Then I would argue that the competition becomes more fierce, right?
Mhm.
Because your competition, again, is no longer about access to information, how quickly you can calculate, you can come up with, certain information, certain sort of insights, but rather Everyone has all those, right?
Right.
Now, what's your edge on top of that? I think that's where we come into play. Now, in terms of market, there's always the, you know, what do you expect versus what's baked into the market. I think ultimately that's the machine that makes a difference. I mean, a lot of people can be super smart, can have the best tools in the AI tools or what have you, right? If the market has already baked in a lot of those information, then really it doesn't matter. So I guess that's the beauty of the market.
And it's still supply and demand. So
It's absolutely still supply and demand.
if everybody had the same information that a certain stock was the buy of a lifetime, um, it's going to flood that market, but it's going to get outpriced. So then people are going to look for a different investment that they can afford. So
Exactly, exactly. It's really just in these days with the help of AI, people may be able to get to that, conclusion or decision faster, a lot
mhm,
faster than before. I think that's really the kind of the key difference here.
yeah, I love that. Eric, what is one question I should have asked you that I did not, and it can be about anything.
Um, that's a good one. I mean, there's a lot of questions that can be asked. I think really one question that people ask us is that what's special about Trade Desk, right? Where do we think our competitive edge is? I think I kind of touched on that topic. On the retail side, we have worked really hard to come up with a set of tools, a platform that would allow customers to access those uh, sophisticated tools, but in the meantime, without being overwhelmed, right? That can would allow them to still be able to have time instead of burning hours and hours of midnight oil, right?
Mhm.
They would still have time to spend, with their family, with their kids, to build up whatever their career is. But if on top of that, they still want to do research, investment in stocks, then I think we have come together with the right, set of tools that can help people with that. And then on the institutional side, we specialize in the data center industry. We think there's still a lot of room to play. There's a lot of demand, right, from AI companies, from all these trends that I've mentioned earlier. And then, there's a lot of capital that's chasing projects, a lot of projects chasing capital. Essentially, that's where we can essentially play a role that help people along the way. So I think that's kind of where we are special in the marketplace.
So people that are still trying to play in the old format of traditional brokerage models and things like that, they're they're going to, just like in real estate and any other business, they're going to get lucky once in a while, but they're probably going to get outpaced. Would you agree?
I would completely agree. I think discipline it's becoming more and more important, especially in the days of AI, in the days of modern, brokerage infrastructure. Because you can easily get carried away from market noise a lot faster than it used to be, right? But if you have certain investment plan, stay disciplined, and then these are sort of the key factors that can help investors essentially kind of with their financial plan in a successful way. But I think I would emphasize longer term investment horizon. That's a very important factor, especially for retail individual investors, uh, so that you don't get, you know, sort of a overreacted from emotional factors when something
Mhm.
happens in the market, good or bad, right? Plus or minus. So I think those are kind of the important factors to keep in mind.
I think that's a key point that you just made is the emotional factor. The speed to information hopefully can keep people curbed down on making emotional decisions versus rational data-driven decisions. I mean, I see that in real estate all the time. My example, like during COVID and the last few years, real estate went up because there was a lack of inventory and people overpaid. And now we're seeing a lot of those markets that are flattening. Some are starting to drop significantly. And, I would rather sit by the wayside, gather the data, cherry pick really good deals, but I don't want to do volume if that volume means we're making very small margins. I would rather myself make data-driven decisions and get involved in something that's not going to take as much time but has a higher margin.
Yep, absolutely, absolutely. Again, sort of goes back to the discipline factor, right? You got to
Right.
have your own set of underwriting criteria, not necessarily chasing the market, chasing the hottest trend, and just stay to your sort of a return hurdle or what have you, and then just kind of enjoy the fruit of it.
Absolutely. Well, Eric, I really appreciate you giving us some of your time and just your journey over the last 2.5 decades. It's I enjoy having people on the show that have been involved in these different market cycles, because those of you that are listening right now, if you just got into investing the last few years or even the last 10 years, um, it's not what it was 20 years ago, and that's good and bad. But I love just having a different perspectives.
Yep, that's same here. Really enjoyed the conversation. Thanks for inviting me on the show again, Derek.
Absolutely. Well, we'll wrap it up there. Everybody listening, appreciate you being here. Do what you can to help spread the word, spread the show around. If you want to get in touch with Eric, how do they get in touch with you, sir?
Can reach out on my email, eric.chu@tradedesk.co, or feel free to look me up on our website.
Perfect. And with that, everybody go out, live your vision, love your life, and we'll see you on the next show.